This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is James Seyffart, who's an ETF research analyst at Bloomberg Intelligence. James, great to have you back on.
Yeah, thanks for having me. Happy to chat again.
For sure, James. Look, another great week for ETFs, for Bitcoin ETFs, and even Ethereum Spot ETFs. We got news that Hong Kong officially launched theirs. Tell us about this launch and what type of performance you're seeing so far.
Yeah, so it's very nuanced here, right? So there's a few different things to look at. The first thing is that the volume wasn't anything overly spectacular, right? So basically, these things traded, the Bitcoin ETFs that launched traded about 9.7 million. The Ethereum ETFs traded about 3 million. So a total of 12.8 million dollars were traded, which is like nothing compared to the US trading volume. The benefit is these guys seeded with a decent amount of money. So like China AMC had $121 million go right off the bat into their Bitcoin ETF and $20 million go into their Ethereum ETF right off the bat. So they came over with some money. That's not nothing. That's buying. That happened over the last few days prior to launch. But that said, the volume was very underwhelming. The main thing here that we have been arguing, my team and I, on Twitter and writing in notes, is that basically the Hong Kong market is way smaller than the US market. People equating this as though they're going to be equivalent in any way need to take a step back and look at this. So part of the problem is like the entire Hong Kong market is smaller. For ETFs, the entire Hong Kong market for ETFs is in the upper 40s of billions of dollars in assets. That means the US ETFs and assets are just by themselves larger than every single ETF that's listed in Hong Kong. So like we're talking two completely different things. So you're talking under $50 billion. In the US, we're talking like $9 trillion in assets. So it's completely different scales. That said, this is obviously a good thing for the market. It's just another avenue for people to get access. Potentially down the line, this could be massive. It's just that near term, this is not going to be some massive come up in the way that the launch of the US ETFs was, in my opinion. That said, years from now, could this be a massive deal? Yeah, potentially. But right now, it's just the market isn't as large, isn't as liquid. There's not as many players, partially because if you're on mainland China, like outside of Hong Kong, you can't actually buy these things right now. You're restricted from doing it, and you're likely going to be restricted from doing it for an extended period of time. It's not going to be like something that like a year from now, mainland Chinese investors will be able to buy these Hong Kong ETFs. That's not going to be the case.
Yeah, and great points. And I've been telling people the same thing. This is just setting the table for future adoption. Like, no way can they compete with the US capital market, which is the largest in the world. We have BlackRock, we got all these big firms, and it hasn't even opened up to mainland China yet. But there's potential. The on-ramp is there, so it opens the door for capital to come in. And I think if you're looking at it from a macro perspective, that there's global adoption of crypto, you need these on-ramps in every major country and financial market. So good news, but I think people's expectations were off, that this was going to blow everything out the water. But no, the US is the largest capital market.
Yeah, the one thing I would also add is something that the US does, which is a little unique, that Hong Kong obviously didn't do. When we have new people or new funds launching, what most people do if they have money lined up, they'll have them go in. So they'll have some money that goes in as seed capital before it actually launches, but they all have money lined up, which we saw this with BlackRock and others. they have the money come in on day one or day two. So it looks like flows. It creates more volume. It drives more interest, I guess. So these guys, there is almost 200. There's almost $200 million, I think, in these things overall for Bitcoin just alone, and like 35 for Ethereum million. I'm talking here. So that's not nothing. But again, if they had done this on the first day of trading, the volume would have looked better. So there's like the way to look at this is on an absolute basis. If you're comparing this to the US launches, they're not comparable. On a relative basis, these were a very big success for the Hong Kong market. And the other thing is today is a holiday in Hong Kong. So yesterday these things launched. Today's a holiday in Hong Kong. A lot of people are on vacation. So we'll get a better feel for how these things are actually trading and what's actually going on at some point over the next, I don't know, say a week or two. Be probably more than 2 weeks will give us a better data set to know how much demand and how much interest these things are going to actually garner.
So James, was that bad planning on their part? That next day is a holiday. Like I wouldn't have done that.
Yeah, who knows? Maybe they wanted to do it when things were low, and they are allowing. So the one thing I would point out is that in the U.S., which I've definitely talked about in your podcast, they did not allow in-kind creation and redemption for the ETFs in the US. So you couldn't hand over Bitcoin and get shares of the ETF, or vice versa, hand over shares of the ETF and get Bitcoin. The only way to do that is through cash. So you have to sell the Bitcoin, buy the ETF shares, and hand over cash to get the ETF shares, or vice versa. There's just way more steps in the cash create process. These ETFs in China, in Hong Kong, are allowing for in-kind. Most ETFs are allow in kind. Most creation redemptions happen in kind, but they also allow cash. That's what these Hong Kong ETFs are doing. So that is one benefit that these have over the US market. But we've also had in-kind ETFs around the world. It's not like a brand new thing. They have them in Europe. So yeah, maybe they wanted to launch it when they knew things were going to be quiet because it's a new thing that they were doing and they've never done anything like this. Who knows? But yeah, if you were trying to make a huge splash, this probably wasn't the best day to do it, considering the next day was a holiday. But like I said, we'll see over the next week or so.
For sure. Tell us about the breakdown between Bitcoin and Ethereum. I'm assuming Bitcoin is the lead dog here. Most people want that, but for the first, well, I shouldn't say the first, but it's significant that an Ethereum spot ETF was approved as well. Is that getting decent inflows?
So you're talking about the Hong Kong Ethereum
The Hong
ETFs.
Kong, yes, I'm sorry.
Yeah. So their volumes. So if you look at a volume basis, it was like. So I mean, let me look at these numbers. Like 23% of the volume was on the ETH ETFs. For Bitcoin, they have we'll say it's like 185, something like that. I don't know exactly what the numbers are. It's like 100. I'll have to look it up. I don't have the numbers in front of me, but Ethereum was like less than 15% of the assets. So it's more like 14, 15% of the assets went to Ethereum. So my boss and colleague, Eric Balchunas, he thinks the Ethereum ETFs, even if we do get spot, will be like 10% or less the size of Bitcoin. I think it'll be closer to 20%. I'm a little more bullish, but so if we look at the market packs of Bitcoin, Ethereum, I think Ethereum's like a third the size, like 30% of the market cap of Bitcoin. So I think that the ETF demand is going to be, at least in the near term, if they were launching in the next couple of months, would be less than their market cap should show, just because we're not seeing the same demand. I mean, we saw Ether futures ETFs launch in the fall of 2023. Crickets. They got no interest. They have very few assets. That said, people maybe were just hoping and expecting ETH spot. I thought we were going to get ETH spot, which we can get into in the US, but for the most part, the demand just isn't there from the TradFi markets that is there for Bitcoin. So Bitcoin is the big dog, particularly with advisors and institutions and retail traders using brokerage accounts to get exposure to crypto assets. For the most part, Bitcoin is the king. Ethereum is going to be a decent amount smaller as far as interest, trading volume, you name it.
Now, James, there were reports that Longdon is targeting a May launch for their Bitcoin and Ethereum ETNs, as they would call it, but it's spot, right? And then also Australia is looking to get their ETFs listed on the Australian Stock Exchange. But let's start with Longdon. What are you hearing about that launch?
Yeah, I mean, I'm hearing this. I don't have any key insights here. I'm hearing that London is moving towards doing something along the lines of allowing these things to launch. I mean, honestly, it's different for London and the UK because they're already in Europe all over the place, right? So we have a lot in Switzerland. There's a bunch in France. There's a bunch in Germany. I mean, they've had Ethereum and Bitcoin ETNs in Sweden since 2015. So that it's not shocking to me that the UK is finally coming around and likely going to launch these things. But I don't have anything other to add than it seems like things are moving forward, and the UK might be adding these things in London. All I would say is we already have them all over Europe. Granted, there is some segregation in like what you can and cannot buy in different regions in Europe, but it sounds like they're likely coming.
Mm. And then Australia, I was kind of confused by this news. It was actually broke by Bloomberg, where they talked about the spot ETFs for Bitcoin and Ether would get approved, but it's actually listing on the stock exchange. Tell us about that, please.
Yeah, so CBOE has CBOE, one of the exchanges that a lot of these Bitcoin ETFs here in the US, they have a subsidiary or a sister company in Australia that's relatively new, and they listed Ethereum and spot Bitcoin ETFs back in 2022. Some of them actually liquidated because there was zero demand for them. So they're already spot crypto ETFs in Australia. So like the it's a little misleading on the headlines that you saw come around in that stuff because they already exist there. They already have assets. They've been there since May of 2022. That said, the main exchange there is the ASX, the Australian Stock Exchange, and they haven't allowed anything to list there. So there are other issuers that are looking to launch. Some of the bigger issuers in Australia are looking to launch some of these spot Bitcoin and Ethereum ETFs there. That said, they already do exist in some way. It's just this is going to go for almost like the big leagues.
Hmm. All right, so let's talk about U.S. spot Bitcoin ETFs. We saw a slow in performance with inflows ramping down, and that makes sense with what's happening in the market right now. But as of today, what are you seeing? And then I would love to get your outlook for the rest of the year as well.
Yeah, I mean the simple answer is things have completely died off. We've seen a few days of net outflows for the entire group. Um, it doesn't look like it's stopping anytime soon. The one thing I would say is, I mean, it's not like we're seeing a mass exodus at this point. It's just kind of drip, drip, drip of outflows. And we just had, I mean, this is pretty normal for ETFs. I mean, these things just had 3 straight months of like massive consecutive inflows, excluding GBTC. GBTC, I'm not even gonna, we don't need to go that route, but that has had nothing but outflows since it converted to an ETF. But all these other ETFs, for the most part, have done nothing but take in money. And it makes sense, like after a trend like that, that you're going to see a bunch of money come out. I kept saying this and things for the last couple of months. I'm like, everyone's like getting used to like day after day of net inflows. So like eventually we're going to have day after day of net outflows. And recently it's been relatively small. So that's showing the interest is down. In like 14 days, 15 days in the middle of May, we're going to get information on who actually bought those ETFs because anyone who qualifies is going to have to file a 13F report, and basically it says what equity securities they hold, and ETFs fall under there. So we'll be able to see like advisors and any institutions that may have bought this. Most people don't file until like literally the day before, the day of. So we're not going to see most of that information for a little while. So it'll be interesting to see there. But the one thing that we have seen so far, and we've heard anecdotally from many people, is a lot of the buying so far has been like just retail, people buying in their own brokerage accounts, their own IRAs, whatever, you name it. There's been some advisors, mostly independent advisors, smaller shops that have like a couple of advisors and maybe 50 clients. They're buying most. We're seeing that too. But what we haven't seen yet, and what we haven't heard is happening, is these major advisor networks, things like things at like UBS and Morgan Stanley, these wealth management platforms that have rules on when you can and cannot buy different ETFs. For the most part, a lot of the big ones really haven't approved these things for just going out and buying for your clients, or at least recommending your clients to buy these things. Anyone who has approved them, it's like you can only do it if the client asks for it, and even then you have to explain why you're doing it. There's all these hoops you have to jump through. Eventually, at some point, these are likely going to be able to be bought by those types of platforms, and they're not here yet. And we haven't seen any indication that like institutions are here yet either. So there's some ways to looking up, but again, if things keep going poorly, who knows? Well, I guess we'll see how diamond hand these retail brokerage platforms are at holding these things.
For sure. And I often remind people about the rebalancing aspect of investment advisors and these ETFs. So you can expect outflows throughout the year, and especially maybe near the blow off top. But to your point, Morgan Stanley, all these guys, there were talks about them coming on board, but they haven't officially launched or got the engine started here. So okay, great stuff. So I got to ask you about the Ethereum Spot ETF. We got the deadline coming up in May, but it's a mess, James, right? I mean, because I've talked to different people in the political realm with what's happening with Gensler, the SEC. Doesn't look like this is happening. Is there any hope for this Ethereum Spot ETF this cycle?
Nah, it's not happening. I mean, I don't know. I don't remember the last time I was on here. In January, I was pretty optimistic. I was like, we have spot Bitcoin. It just makes sense that we're going to get spot ETH as well. And then as the months went by, we just didn't see, I saw no movement. And I mean, the .ETH people on Twitter were very upset with me for flipping from thinking it was going to happen to thinking it wasn't going to happen. But I'm just looking at the information and trying to get the call right. There were some people before me that thought it wasn't going to happen, but yeah, it's just not going to happen. There's no movement. If you basically, as the months went by, as we were looking at like what was going on with the spot Bitcoin ETF filers and all this information, there was constant going back and forth between the SEC, things that I could look at and be like, oh, that was almost certainly the SEC made them do this. There's been a few updates and filings in ETH, but there's nothing indicating like there's this going back and forth. And we've talked with issuers and they're like, yeah, we're not getting much. There seem to be a little more closed-lipped than they were for spot. I wonder if the SEC was annoyed, but like for the most part, I'm not seeing any indication of the SEC giving feedback. And now we're less than a month out from the final deadline on Van Eck and ARK, and yeah, there's just no indication that anything's happening. So I have views on how they're going to do this, what I think they're going to do. Obviously, there's been a lot of movement. Consensus filed that lawsuit saying that the SEC was going after them, claiming likely that Ethereum was a security as early as 2023. So the SEC might have been lining up to do this stuff for a long time. But what I kept going back to was the only reason we got the spot Bitcoin ETFs was because Gensler voted for them. So it's a 5-member commission. Gensler is a Democrat. His other 2 Democrat commissioners voted against approving these ETFs, despite the fact, the overwhelming evidence that the courts and the doing so would basically be defying an order of a federal court, as far as I'm concerned. Most lawyers and legal experts I spoke to thought the same thing. There was a few that agreed with the Democratic commissioners, but Gensler was the one that flipped and basically approved these alongside Hester Peirce and Ueda, the Republican commissioners. So essentially, Gensler only did it because the court forced him to, right. And it looks like that's kind of might be the case for what's going on here with ETH. So I have ideas and views on what I think they're going to look like that I won't really know until we see those official orders, which should come out somewhere around May 20th to May 23rd would be my guess.
So James, look, based on what you just said, right, that Gensler only did it because of the courts and the ruling. Let's say they disapprove these spot ETFs and they continue the same story that they did with Grayscale. Could the SEC be sued depending on the facts, right? Like you said, the information we get around May 20th or so, could they be sued by Fidelity, ARK, BlackRock for not approving these ETFs? Once again, based on the details.
Yeah, I mean, we'll have to see what the letter looks like. So my assumption, so like one, we don't know what the SEC is cooking up. They've had plenty of time to plan how they were approving these spot ETFs. They didn't have the spot Bitcoin ETFs didn't have a choice, and it seems like they had in their back pocket that they were always going to deny these ETH ones. So they probably wrote those approval letters for Bitcoin knowing that they had a way that they could deny ETH and it would hold up in court. My theory is because they put in this correlation analysis for Bitcoin saying it was sufficiently correlated. I think they're going to lead on correlation analysis and basically say ETH isn't sufficiently correlated. Yes, it has been more than sufficiently correlated, the futures market and the spot market for ETH for the last couple of years. But if you go back 3 years, the correlations are not good. They're way weaker than the windows of when they approved spot Bitcoin. So I kind of think they're probably at least initially going to lean on those correlations. Say the spot market is not correlated enough with the Ethereum futures market, and therefore we are not approving these. The problem with that route is that argument falls apart once you get into 2025, because all of a sudden, if you're doing a 3-year look back like they did for Bitcoin, that 3-year look back is not there's strong enough correlations right now between the ETH futures market and spot ETH markets. So there's more than strong enough correlation now. It's just when you look back in history, it's not that great. So as long as the correlations stay high, which I don't see any indication that they're not, I've obviously seen since the spot Bitcoin ETFs launched, I've seen correlations tick up consistently for Bitcoin futures and spot alongside ETH futures and ETH spot. So all of a sudden, that's going to fall to the wayside. So then what are they going to do? If somebody applies again, they cannot deny on correlations. Who knows? They might find other objective facts they can deny. So if they deny on correlations, I think that will hold up in court. Or it would be a lot easier to hold up in court. And if I'm an issuer, I'm probably not going to take them to court over that. But then after that, depending on what they do, they might be liable to get sued. But then again, based on all this reporting coming out of Consensus and all these other people, I didn't think the SEC was going to go ahead and try to call ETH a security. That was my personal view. There's a lot of indications that might not be the case. So if that's the case, they could use the correlations to kick the can down the road, and then 2025 start calling ETH a security or something along those lines. Theoretically, there's nothing stopping them from saying they believe ETH to be a security and denying in May, which would be like the nuclear option as far as I'm concerned. I don't know. I really don't know how it's going to go. I look forward to reading the denial letter that I'm fully expecting at this point. But yeah, time will tell.
Yeah, absolutely. I'm concerned about the security aspect because I didn't see that coming either, that they would go after the Ethereum Foundation and Consensus. And I spoke to one of the lawyers at Consensus recently, Bill Hughes, and we talked about this. So this is very surprising. And, maybe, James, in the big picture, let's just roll this cycle with the Bitcoin spot ETF because there's so much uncertainty with the SEC and altcoins and security questions, and Congress hasn't acted that it's best that maybe we don't have any altcoin ETFs. Maybe let's just go with Bitcoin, and maybe by the next cycle, Congress may have acted and we get clarity where we don't have all these security, non-security questions.
Yeah, I kind of agree. You need Congress. You might literally need an act of Congress to get all this sorted out. I do have one pet theory that I haven't heard anyone espouse that I don't know how accurate it is. A lot of this seems to be generated around like the security talk around the fact that they are doing staking. So the one thing I will say is, even if we do get Ethereum ETFs anytime remotely soon, again, it's not happening in May as far as I'm concerned, but if we get them in 2025, I don't think they'll be allowed to stake. So I wonder if Gensler and the SEC are going to try to thread this needle and just basically saying staked ETH is a security, but ETH itself is not a security. And that might help assuage their concerns. But I think the SEC just gets a lot of benefit right now with this lawsuit with Coinbase and Kraken and these other lawsuits by leaving ETH status like rather ambiguous as far as the courts and everything else is concerned, because all of a sudden, even if you go and say Ethereum is security, then it's like everything else is security kind of thing. Maybe some others, Litecoin and some others are probably going to be quantified as commodities, but that's a different discussion. But also if you go and say it's not a security, it's a commodity, then you're going to have every other altcoin being like, well, we did the similar things, we did this. If Ethereum is not a security, then we're not a security. And so by leaving this ambiguous mess out there, it's like beneficial. It shouldn't be. There should be more clarity, and we should know exactly how the SEC is looking at this. But if you take a step back, it kind of benefits Gensler and the SEC to leave this ambiguous, is it a security, is it not a security, without really giving an answer as far as a lot of these court cases. And I do think the SEC is going to lose a lot of these court cases. A lot of these crypto court cases that Gensler's SEC has put up, I think he's likely to lose. How many of them, what percentage of them, even within court cases, there will be some victories for the SEC, I'm sure, and some victories for crypto firms. But I think overall, the SEC is going to lose a lot of these cases that they're involved in right now. And I think they know it. I think Gensler knows that he's likely to lose these cases, and it doesn't matter to him because he's a Warren disciple. He reports to Elizabeth Warren, and she doesn't want these things to happen. The left wing of the Democratic Party doesn't want these things to happen. So even if it's just like putting up roadblocks and stopping things that are ultimately not going to hold up, it's still a win for him.
Yeah, I get that feeling too. They just throw anything at the wall, see what sticks, but they don't care if they lose because I think Elizabeth Warren gets off on just I did this. We try to hold these people accountable and use it as talking points. It seems like just from a political standpoint. But the election's coming up, and not to play politics or anything, but we'll see what happens. Well, let's say Biden doesn't win. Gensler's out. A Republican comes in. They appoint a new SEC chair. Do you think that could change things? And with the bull market maybe continuing into 2025, and maybe to your point, 2025 is the year they know they're going to lose. The Republican chair or whatever it may be kicks out these lawsuits or whatever it may be and approves. Do you think that's a possibility?
I think the other thing. So I said you might need a little lag to Congress, but a complete change of administration is another thing that could get things rolling a lot quicker. I think. Honestly, my pick if a Republican does win would be to put Hester Peirce at the head of the SEC. I agree with like 90% of her views from a personal perspective, and I just think it's the right way to look at things. That said, who knows if that's going to happen, right? So I'm not banking. Yeah, I'm not banking on any of that stuff. The other thing I would say is honestly, even if Biden does win again, I wouldn't be surprised if Gensler is gone and resigns and leaves in 2025 or sometime after the election. So I wouldn't be shocked, and it's been all over the internet. It's not just me saying this. It seems kind of likely that he would leave within a year after the election. So time will tell there. I just don't think like another I mean, honestly, Crenshaw, who's another Democratic commissioner, is even more hardlined against this stuff than Gensler has been. So if Gensler leaves and they put her up into that position or somebody else like that, there's no guarantee that even a new SEC commissioner would be more adaptive or preferential to these types of interests.
Yeah, man. Hopefully we get Hester in there. That would be awesome.
I mean, even still, you got to remember, like, it's not guaranteed that you're going to get everything you want there. It's still a 5-member commission, and who knows who else would be come in as a commissioner on there. But it certainly would be a far better outcome for anyone in this space.
For sure. James, always great stuff, my friend. I appreciate your insights. Thank you so much for joining me.
Yeah, thanks for having me. Good to see you, Tony.